My guest today is Sam Turner, a former corporate CFO turned small business acquirer based in the UK. After building a multi-billion euro business in the travel industry, including acquiring and integrating competitors under private equity ownership, Sam walked away from that world to buy local HVAC businesses. Thanks a lot for coming to the podcast, Sam.
No, pleasure. Good to speak to you, and happy to kind of share my story, and hopefully it can help somebody along the way.
Yes, this is the thing. I always enjoy obviously the whole conversation, but I was just thinking before you came on that there are so many people who want to live a life of what you do. The people know how to do deals. They do it on their jobs, but for some reason they never, if we can say, they never jump. So they are not willing to leave their jobs to take that risk. So I'm trying to understand your original story and most importantly, the thinking behind this, because again, there are tons of people who would like to be like yourself. I hope you do not take that lightly. So let's start. Where does this drive come from, and why did you walk away from a high-paying CFO job to buy small blue-collar businesses?
Yeah, so in fact, my last 2 or 3 years, I moved out of the CFO role into sort of a more commercial leadership. So I've had a finance background, but sort of run commercial teams in the last 2 or 3 years. But I think that the drive is ultimately being unsatisfied with the life I was leading. So yes, I was in a very, let's say, successful role, earning lots of money, sat in a nice location. I was living in Switzerland at the time, beautiful location, right on the lake. But woefully, let's say, unhappy with my existence. So I didn't enjoy the job. I was fed up with the politics around the job, and anyone that's been in a sort of large corporation, I'm sure will know what that's like. Fed up with the politics, but also fed up with being on a plane every week, because I was traveling non-stop, and I had 2 young kids which were growing up quickly, and I wasn't spending enough time with them. And I was in a role where I was accountable for a large chunk of the P&L, it's a multi-billion euro organization, global organization, but I couldn't make the decisions that I wanted to make. And I felt like, I had all the responsibility, but none of the autonomy. And I felt that, those things create a level of stress and a level of, let's say, unsatisfaction with your life. And ultimately I wasn't happy. So I took the decision that this is not how I wanted to spend the rest of my career. I was still relatively young at sort of 42, 43 at the time when I kind of made that decision to exit. And I felt like, I had one shot at this, and therefore let's do it now. So they were the kind of drivers for me. Ultimately, you've got to be to a certain level of dissatisfaction to make that jump. But I had that for those reasons.
And how was the thinking process of how did you actually make it come true? Like, did you leave and then decided, okay, what type of businesses I would like to acquire, or what do I want to do next? Or how was this whole process? Maybe it was like a month or half a year or a year, or like how systematic you were and how it all came together, because I guess you didn't start looking for businesses at the same time while doing your super busy work day to day.
Yes. So the last, I would say, 6 months of my role, I decided at that point that I wanted to leave. I engineered an exit with the company on friendly terms, which meant that I ended up with a sort of long period sat in the garden, so to speak. So I had a 12-month garden period. This was all just before COVID happened, and we were in a travel business, and then COVID happened. So we almost, the business went from being very successful and almost being sold to being almost out of business in a number of weeks. It was quite a stressful time, but I'd managed to sort of sign that exit. And so the minute I signed that exit, I had like 3 or 4 months left to kind of run and work. And then I was going to be sat in the garden. And those 3 or 4 months, I spent a lot of time thinking, a lot of time digesting content, reading content around entrepreneurial aspects. But I was caught between investing primarily in property and investing in businesses. And I think the more I learned around the whole sort of call it ETA stroke search fund stroke buying a business kind of model, the more I felt like that was more suitable for what I wanted to do, because I think property is great, but it's less interesting, it's less people focused, and I wanted to kind of be involved in that side of things as well, where I think some of my skill sets lie. So that's kind of why. So I had a period of time, probably 3 or 4 months before I left, and then in the first 3 or 4 months after I left, when I was sat in the garden effectively, I managed to then sort of plan that out in more detail, get my thinking straight, managed to sort of educate myself as much as possible, and then sort of went from there. So the whole thing was over a process of maybe 6 months before I'd sort of crystallized what it was that I wanted to do. Having said that, I didn't choose the industry until I'd started to search for businesses. I'd started talking to a number of businesses in a number of industries. And it was only sort of probably another 3 months into that journey that I was then set on the type of businesses that I ended up going into.
So there are various opportunities, business opportunities to pursue, even when it comes to acquiring those profitable traditional businesses. How was your thought process and the research period? Like, what were the questions? What type of companies you met? What were the lessons? What were the pros and cons on some industries? And what did you really go through when eventually making the decision to start acquiring HVAC companies?
Yeah. So initially I was looking at companies by their numbers. So looking at size, sort of balance sheet strength, understanding really, what could I afford to do with regards to numbers rather than actually sort of industry specific. And I must have spoken to probably companies in maybe 15, 20, even 30 different kind of sectors.
A quick break. A lot of you know how to put together deals, but the main problem for you is you don't have enough deal flow. That is where today's sponsor, CapitalPath, comes in. They give accredited investors access to curated SMB acquisitions, the kind led by searchers and independent sponsors, buying established, profitable companies in various sectors, take home services, healthcare services, light manufacturing, IT, and many more. And if you log in, you will see a full deal room. Financials, tax returns, sponsor profiles, the value creation plan, and you can literally co-invest on per deal basis with the minimum starting at $25,000. And there are no management fees. CapitalPath only participates if investors get their capital back and profits are earned. And the best part, you can do all this without leaving your job. So go take a look at all the deals they offer on capitalpath.com. That's capitalpath.com. Or just hit the link in the show notes. Now, back to the episode.
Now, my criteria, which I kind of refined over time, and I'm still refining as we go in terms of the being more focused around what it is that we're doing. My criteria was, I wanted always to build a group of companies. So it needed to be a large industry, a fragmented industry, an industry where the valuations were such that it lent itself to the multiple arbitrage that could be gained by buying companies at one price and then aggregating the group effectively together to be worth a higher multiple. So that had to be there as well. It had to be companies that were not at the forefront of technology. I'm not a tech person, but I understand the value of technology. And in fact, actually, that's one of the kind of key strengths that we'll bring to the group and the business and the industry that we're working in now. But I didn't want to be in a tech business that was changing all the time and you had to be at the forefront of that. It was going to be overtaken by Google, Amazon, or AI tomorrow. So that was another kind of key bit of criteria. So it was something that in the end I kind of filtered down to more the kind of the trade type businesses, the blue collar trade type businesses, it was probably more luck than anything that I fell into with the first deal. Effectively, then crystallized my thoughts around where I wanted to take it to Post-acq. But it could have been a number of trades, I guess. But HVAC, stroke, M&E or mechanical and electrical is kind of the kind of broad area now. Hard FM services that we're focused on, but that has been refined over time. But there's some core pillars in there that is, large industry, fragmented industry, valuations are nice, lots of businesses at that kind of long tail of businesses at the level that and the size that we want to be able to acquire, and things that were not rocket science as well. So I don't want something that I couldn't understand. And for me, I'm not the sharpest person in the world, so it needed to be a relatively straightforward industry to get into, which I think this one is as well.
did you ever consider raising a fund, or you immediately thought like, okay, I'm gonna go deal by deal?
No, so I again, I have the luxury, let's say, of having a little bit of capital behind me personally, having a network of people that I could call upon to invest. So I have a small number of investors that were, let's say, close acquaintances of mine that had the capital as well to fund. So I never really saw the need to kind of raise a fund per se. Still don't. I wanted to retain the majority of the equity, which I do have within the group, and therefore structured the investment opportunity for investors on a kind of deal by deal basis initially for the first 2 or 3 deals.
And before talking about Advantos, you mentioned not being the smartest guy. Obviously, I don't believe that. But if you analyze yourself and analyze yourself before getting into this, what are your strengths and weaknesses, and based on your previous experience and maybe now of what you've been doing?
Yeah, I think I mean, I always said this throughout my career when I was sort of promoted each year, and I sort of rose through the ranks in my sort of corporate days. It wasn't because of the capability that I had. I think it was because of the determination and passion and drive that I wanted to succeed. And I think that all stems back from my early days playing football. I played professional football when I left school. That was my first job, and it was drummed into you to kind of want to win and believe in winning. And when I left that, I was quite devastated, and almost that kind of spurred me on to succeed at something. And that's kind of been the drive, I think, inside, is that I always wanted to, and I still do, always have that drive to succeed and be, have be able to sort of sit back and be proud of what I've achieved myself. And I think that kind of drives me on. And I think there's lots of narrative out there as well around the importance of mindset and belief in order to achieve things. So it's not necessarily about the capability. So I did okay at school, not brilliant. Academically, I'm sort of I'm not super when it comes to academic. I'm not silly either. But I think it's more about the drive. I think then the experience, I mean, I qualified as an accountant. I spent a number of years in kind of senior finance roles, which equipped me very well. I then moved into commercial roles and run businesses as well. So I had a lot of relevant experience managing large teams, managing large numbers, which all helps. So some of that from an experience point of view sets you in good stead in terms of, this type of thing and what you're doing. But I would say my strengths are the determination to succeed, number one. And then in terms of skills and experience, I would say I'm quite good at pivoting between the finance world, having that background. So I'm quite comfortable talking to investors, talking to lenders, talking to private equity. But I'm also quite comfortable on the shop floor, so to speak, talking to engineers, talking to small business owners, because a lot of in my latter stage of the career, when I was running the commercial teams, a lot of my customers were small business owner-managed businesses, and therefore sort of working with them and supporting them to grow whilst going back to the boardroom afterwards was kind of where I played that role. So that's what I kind of really excel at, playing that pivot between the finance world and actually the sort of hands-on what's the reality on the ground. Because I think there is a danger sometimes of this whole space being largely academic in terms of, in theory, this is all possible. And I think in the small business world, that goes out the window quite quickly when you acquire the first business and you have to kind of turn up and deal with people on a day-to-day basis.
Okay, so when exactly did you leave your job, and where is Advantos today?
So I left my job in 2020, and was it 2020? Yes, and acquired our first business in 2021, in December 21, I think it was. Yeah, so 3.5 years ago, that was the first business. We then acquired 2 further businesses in 22 and 1 business in 24. So we've acquired 4 businesses, but we've also set up organically a business as well. So we have 5 businesses within the group, with sales or revenue of around about £30 million. We're sort of starting then the process of looking for the next acquisition. So the plan is to acquire probably one business per year through a combination of surplus cash that we have generated from profits in the group, as well as a bit of debt that's added into the mix. So self-funding, so not having to raise more equity capital effectively, and then continue to acquire businesses over time and drive organic growth. So the ambition is to get to 150 million of annual revenue by 2033. That's the kind of 10-year plan that I set out a couple of years ago. And that's kind of where we are. And we're pretty much on track from a revenue perspective. I would say we're not yet on track from a profitability point of view, and the margins being a little bit weaker than we'd anticipated for various reasons. But that's where we're at, and that's kind of where we're headed towards.
What is the message to maybe someone who's having their lunch at the moment, listening this, going back to the office very soon, or it's an evening time for them, heading back to office tomorrow, but they're in a similar position that they know they're capable of like building such company, buying businesses. They have the skill set, maybe capital, maybe more or less. What is your message to people like this?
I think it would be easy for me to say, yeah, just go and do it and jump. I think everyone's got to obviously make their own call. What I would say is, walk in with your eyes open, meaning do the research before, understand, speak to people, reach out to people. I'm forever talking to people that want to touch base because they're thinking of doing something similar, maybe in a different market, whatever. I'm more than happy to have those conversations. But speak to as many people as possible. Educate yourself around what the process looks like, what's entailed with it, what the sort of expected outcomes are. So don't walk into it blind. I would say once you're comfortable that actually having done that, you still feel it's right for you, then you've got to have the courage to kind of take that step. But don't think that it's all. Again, I will reiterate. Don't think that it's all plain sailing. I would say building a group of companies and building an equity value to several million pounds is not complicated. It's really not complicated, but it's also not easy, if that makes sense. So there's some hard work, but there's some relatively simple steps, and it's definitely achievable.
Okay, now let's talk about the very first acquisition. How did it happen? How did you find the company? How easy it was? How hard it was? You already said some post-acquisition, things happened, because the first deal is often what makes us or breaks us, gives us the confidence, or really takes it all away. How was it in your case? And what is the story of first acquisition?
So the first acquisition, it came actually from a contact on the Search Funder platform, which I was part of. It was a business that was not through a broker. He had an accountant that was representing him. His accountant was representing him, and I was actually still living in Switzerland when I did the deal. In fact, I only met the guy in person sort of 2 weeks before actually closing the deal. It was a business more in the construction space. It was heating and plumbing for sort of large scale developments, new build residential developments. So the installations for that. We're now no longer focused on that side of the business or in the construction space. But it was a deal that I think I rushed into too quickly. I was too keen to get the first deal done. I'm surprised that I actually got funded for the deal. So I had a funding from a third party lender. And given that it's kind of construction related, it wasn't a terribly big business. It was making £350,000 EBITDA, roughly at those levels. 5 million of revenue, so not a high margin business. I'm surprised I got funding. I had no prior experience in that space, so I think it must have been the good relationship that I'd built with the lender at the time that they kind of pushed it through. So that was the deal. We paid something like 3 times earnings. We paid 70% up front and 30% over a kind of 3-year deferred consideration period. And I funded that through partly with a bit of equity from myself and a couple of investors, and then the rest through the commercial debt facility that I had. So that was the first deal. that we did. And I would say, since we did that deal, I don't think we've ever made money in that business since. So that gives you some context around what can happen.
A quick pause, and what I want to say is that if you want to attract people like Sam to your life, or various investors, people who buy companies, people who sell companies, or simply want to grow your business, what you should do probably is book a free call with this company, Spacebar Studios. They have been sponsored for this podcast for the past 3 months. Their founders, Brandon and David, what they offer at the moment is for the next 2 weeks, if you sign up with yourself, with your business, they will literally help you set up your own newsletter and really make it work. So, and most importantly, prove to you that this channel works. They do it with 0 fees, with 0 risk. And who knows, maybe within the next 2-week period, you already have people reaching out to you because they're reading your newsletter. So again, go to spacebarstudios.co, book a free call, talk to Brandon, talk to David, and see what they have to offer for you. Again, back to the show now. What, all those conversations you had with people who have bought businesses before, what were the lessons there, and maybe why did you decide to acquire such business? Was it only because you wanted to get it done, so you're in the game, or because the numbers doesn't seem like so good? And if you're listening all the maybe podcasts, talking to people say that don't go after those small businesses, to go for bigger. So what about you?
I think it was exactly that. It was to get in the game, and in hindsight, I would say I wish I hadn't have bought that business, because it's been the bane of my life since. Having said that, it enabled me to get in the game, and since then, finding number 2, number 3, number 4, etc., is much easier once you've got the first under your belt. So, is it a price worth paying? Maybe not. But I would still implore everyone to do their don't be so focused on getting the first deal done. Make sure it's the right company, and make sure you do your due diligence properly around. I think where I fell down on that deal is I didn't spend any time thinking about who were the people in the business. So who was the guy that was going to run the business? It was the number 2. I didn't meet him until the day before. So I did no real diligence on him. I wasn't able to meet anyone else in the business before. The quality of people that were in that business, honestly, was quite poor. The systems were non-existent. The culture was not great. And these are things that actually make or break a company. So once the owner left, we've been pushing water uphill ever since. And in fact, we're now almost out of that business. It's down to a fraction of what it was. And we've pivoted and used that legal entity to drive the new organic business that's going very well. But yeah, I would say they're some of the learnings. But I think it was to get in the game, and I think I was too. Once you're doing your first deal, you tend to go, and there's one conversation that goes well and looks like maybe they're going to accept an offer. You can get carried away with that, and I think I'd sort of dropped everything else and sort of saw the opportunity to close this one and decided then, let's close this one. And in hindsight, I should have explored other opportunities and taken the best of those opportunities, which wouldn't have been this one.
No, trying to understand your learning from the first acquisition, if you can share what revenue, what profit, EBITDA margin type of companies you were looking for, because the first one was 5 million in revenue. You said 350,000 in EBITDA. I'm trying to understand, like, what did you learn?
So, I mean, for me, it was less about the hard and fast numbers. It was more about the services they provided. So we didn't want to be in the construction space. So we wanted to go into firms that were in the sort of more commercial, existing or built, what we call the built environments, and managing in that space, which I think is an easier place to do business, and it's easier in terms of making money in that segment. So that was key. I think we set out at a minimum revenue of sort of 3 million. So 3 to 10 or 3 to 12 was the kind of target revenue range, ideally with a kind of close to 10% EBITDA margins. The two businesses that we acquired, one was on the smaller side, an electrical focused business that was around about the 3 million, but again, margins that were north of 10%, which was healthy, and the other one was around about 6 or 7 million in revenue and about 10% EBITDA margins. But both of which were focused on the kind of commercial market, which is where we'd kind of learnt from our mistakes in the first business.
One very interesting thing you brought out was if you haven't bought the second and third business like reasonably quickly, you would be out of business today. Why I'm bringing this up is there was a guy, he works in a family office in Germany, and he visited one of the, let's call it, I'm not mentioning the name, but OGs in this Swedish serial acquirer model, who has bought like almost 100 companies, and now he did it himself. And he had he was fortunate to have a meeting with him, and he like was asking advice, so-called, if you were start again, like what's the number one thing you would do? And the answer was like, just buy 4 or 5 companies quickly, like do it fast, because if you just buy one, the investors get bored. You probably promise them something else, that you're building a holding company. This is one thing. Another thing is that things can go wrong, and yours is, if I can say, a great example for that.
Yeah.
And again, he was like, okay, what else secrets or advice you have? Just buy 4 to 5 companies fast. And he was just kept asking follow-up questions like, what would you do? How would you do? I don't know how, but just buy 4 or 5 companies fast, because things can happen.
Yeah, I mean, there's something in that, and I think diversifying your risk by acquiring more is a reality, and that's helped us. And because of that, and I think that's always going to be relevant. If you've got 5 or 6 businesses, there's always going to be one that's probably problematic, and if it was just that one, then the risk is you have no more business. So if you've got 5 or 6 or 4 or 5, then I think you should have that diversity and that risk more covered. That was certainly the case in our example. Literally, we would not have a business unless we would have ploughed more and more money into it, which at the time, given the liquidity, I probably didn't have. And it would have been a difficult ask to the investors to kind of put more money into something that wasn't really working. I think now everything that we're trying to do is more clear now than it was at the time originally. And that's part of the learning as well, is you can't be perfect in terms of having a perfect strategy, because you'll never start otherwise. And there's something to be said of just getting in the game. That said, I think I wish I'd have researched probably more. And I'm surprised myself, because I'm normally quite good at that kind of planning and strategy piece, but I was too quick to jump in, not understanding the industry well enough, not understanding the kind of how to make money in that industry, the different dynamics, etc. And so there's a learning there. So I do a bit of research around that and have a stronger kind of thesis or a stronger strategy that kind of is compelling, and talk that through with people that will challenge you on that. I would say that's kind of worth doing. But yeah, absolutely. Risk mitigation, buy a number of companies, because then you've got something that can support each other, let's say.
You have said that you have decided not to integrate companies post-acquisition. Can you please talk more about this?
Yeah, so my philosophy and my, if you like, my strategy initially was, I'm going to build a group that actually has slightly, so each company has slightly different value propositions, maybe slightly different services that they offer, but there is some collaboration opportunities between them. And the logic there is, if you've got one company that's focused on, that is a specialist in the electrical side, and one company that's a specialist in the HVAC side, and one company that's specialist in plumbing or whatever, clearly there's a complementary set of skill sets, etc., that can be cross-sold and work together on larger jobs. So that still holds true, and that was kind of one way that we would drive some synergy effectively and some benefit for each of the businesses being part of that platform. The other thing is I've had a lot of experience on integrating businesses, obviously in a much larger context, and I think my experience has told me that what you try and put down on paper very rarely is materialized to the same extent, because there's always risks that are not really covered or planned for, and dyssynergies in that. And I think in a small business context, so it was very painful for me integrating companies. It's not that because I didn't want to go through the pain, but the learning from that is it's harder to do than what the PowerPoint tells you. The other thing in a small business context is when you've got a handful of key people, a handful of key clients, a handful of key suppliers, making dramatic change to integrate companies together is a highly risky approach in a small business context, even more so than a large business context, which can handle that and manage with that. So they were the kind of principal reasons why I didn't want to integrate companies. Now, my theory on that is being refined all the time. So whilst we're not physically integrating companies still, we are moving all companies to a common set of technology platforms. So we all now have the same technology, which enables us to share best practice. It enables us to support each other. It enables us to start to talk about, can we provide something once on behalf of the group? So we will start to look for some of those benefits because I think we need to, and we'll be silly not to. Having said that, but the businesses retain their own brand. We're at the moment refreshing all the brands so they have the same look and feel as the group, but they will retain their own brand. We're launching that actually next week. But they retain their own P&L responsibility, but there's some shared common elements now. So it's kind of almost like a hybrid model. And I think that kind of fits well, because what I don't like about the integration model and what I found by running businesses in a decentralized and then a centralized way is once you centralize anything, you lose really the accountability on the P&L, because you end up basically with one P&L and not, let's say, 4 or 5 with people really accountable and fighting for that P&L. And once you then integrate that, you're the only owner of that P&L. Nobody really then is accountable for that apart from you. And I think that there's a real kind of risk of diluting that accountability. So that's kind of one reason, as well as the risk. So we retain separate brands. We will do certain things together. And I think therefore, one of the questions no doubt will be around, or how do you create value? And I think we've got a clear operating model now where new companies can come in. We'll retain the brand, but we will change things. It will look and feel like the rest of the group, so we can work in front of customers and customers can see, oh, you're clearly part of the same group. We drive the same standards. We will move you to a common set of technology. We will enable that technology and your business with clever AI that we've invested heavily in as well, so we can bring all of that to the party. We can't do that if we just leave the businesses as they are. So it is a hybrid model now, rather than a let's say a portfolio approach or a fully integrated approach.
You clearly did better with acquisition number 2 and 3 compared to acquisition number 1. You've said it out loud. What is the reason maybe behind this? Is my number 1 question. And number 2 is how was the post-acquisition? Because these deals happened like really back to back, one in July, one in August.
Yeah, interesting, because I've just come back from meeting the former owner of the third business for coffee this morning, because we still have a good relationship. But I guess one of the reasons, so we learned from the mistakes of the first deal. So we didn't then go into the construction space. We wanted to be in the commercial market. So we learned from that. We learned from not having too thin margins in a business, because when something goes wrong, then you're struggling. So these businesses were both much healthier in terms of the margins that they were making as well. So there's certain things that we learned from. I think with one of the businesses, the former owner wanted to continue. So the transition risk was very much reduced. That was a smaller business, the electrical business. We've since changed him by mutual agreement, because he wasn't ready to kind of really grow the business to where we wanted to be, and he accepted that in the end. But in that initial phase, it was helpful because there was no transition. On the third business, we obviously spent a bit more time with people. We were careful around the communication. I mean, it's common sense, right? But maybe a lot of people don't do this. But what you want to do is immediately put people at ease, because when somebody announces, and it's always the former owner that talks initially to the teams to say, look, I've made the decision to exit the business, to sell the business, these are the new guys, etc. And then you sort of come in and introduce yourself, etc. You've got to put people at ease, and that means that they have to believe in the fact that their world is not going to turn upside down tomorrow. So what we do is we talk to people, we explain our model. Our model is not to change everything. Our model is the brand will be the same, the management will be the same. We're trying to just build a little bit on top of the good business that you've got. You won't see changes from tomorrow. We'll be working closely with the management team and we'll be supporting, and we'll just talk about the benefits. And they have to see that that's the reality. So if you then start changing everything a month later, obviously you lose your credibility. And I think that's kind of really important. It sounds, and it is super common sense, but maybe it's not done everywhere. So I think you can't communicate enough. Communication actually is one area that always comes back with your people survey every 6 months, and always comes back with still there's not enough communication. It's one thing that I'm really, really hot on. But most of the people running these businesses are not well suited to, or not been used to communicate with their teams. So their teams have no idea what's going on. No idea the direction of the company, no idea what we're trying to achieve, no idea of the plans, no idea of the performance of the business. That's the norm, right? For us, it's about creating that clarity, creating that kind of sense of direction, creating the context for people to understand where are we headed, so you can make decisions within that context. So communicating is a big thing that I'm very big on. And in the early stages, communicate a lot to reassure. So it's reassuring teams, it's reassuring customers and suppliers, and then don't change anything in the first month, because if you say you're not going to do it and you start tinkering, people will then, you'll lose the credibility with the people, and that's what we did, and it was fine. There was no dramas.
Now today you have a portfolio of 5 companies. You said you've acquired 4. Built one from scratch. Why did you decide to start a company from scratch? I'm asking because you've seen the power of acquisition, like what it can do. Like, what is the thought process behind this?
So what I did, so we have the 5 companies now, but when I had 3, so when I acquired the 3rd, I then hired a group CFO. So that was the first hire, let's say, at a group level. Then my wife started to work full-time in the business at a group level as well. And then maybe just at the time we were acquiring the 4th business, I hired a group COO. And this was the first hire at a senior level from within the industry. So up until then, myself and my wife, the CFO, who's brilliant, ex-PwC, but he's not from the industry, he's not networked in the industry. So when I brought this guy in, the COO, it was like a breath of fresh air. He started to really provide ideas, bring new customers, has a huge network within the industry. He then had the idea, and it was his idea to actually bring in people that he knew into the business actually that was failing. So in the first business, we set up this division that was a separate division, but within the same company. But they're kind of run almost independently. They just share the same company and finance and whatever. And he gave me the idea of starting this thing and actually growing this, because he knew that he could bring his ex number 2 from where he was previously. He knew a number of engineers that would want to come and work with us if we could do something different, if we could treat them in the right way and create the right environment for them, all the things that he wanted to do but couldn't do because he'd been handcuffed or been not able to have done with his former employers. So he sold me on the vision of this. We put together a bit of a plan, and then we executed by bringing in that number 2, then starting with a couple of engineers, then selling to customers, and it just mushroomed from there. And what I saw was the power of getting the right people. This for me then became the aha moment, and it shouldn't have taken that long, but I realized that there were really good people in the industry. You just needed to actually pick them out, and actually maybe we didn't have so many of those good people within the companies that we'd acquired. There's 1 or 2, but there are also people that can increase the quality that you have. And actually, when you do that, and when you bring like-minded people in, you can create something really special. So we've grown this business from nothing to, in the first 12 months, they've done 3.6 million in revenue, with profits of double-digit percentage points in profits. So that has been phenomenal. And what we've then done since then is actually hire more senior talent and try to kind of build out and accelerate the organic. So I think there's an opportunity to build organically with the right people. Once you've got a base, you can't do it from scratch. You need the base to do it from. And that's worked incredibly well if you cherry pick the right people. And he knew the right people, and it's down to him the success, and we've kind of allowed him the freedom to maneuver and create a great environment. And if you look at the feedback we get from the engineers, I think we have 22 engineers, I think, in that business. The feedback is fantastic. They're always the highest on the feedback around engagement and everything else. It's super high because we're really mindful about who we're bringing into that business, because we're starting from scratch, we're starting from zero, so we can be really mindful of who we want to be in that business. And there's a lot to be said of the ability to do that. Now, can we grow to 150 million by replicating that model? No. So therefore, are we going to continue to look for acquisitions? Of course. But it will be a combination of the two things that we do going forward. So I think there's a lot to be said for that. If you've got the right people, and they have the entrepreneurial spirit as well to kind of grow something. And he'd done that previously in his former life, as well. So he had the experience, and I took a gamble, gave it a little bit of working capital, into that kind of business. And it's done extremely well.
Sam, this is a fascinating story. I definitely would like to do round 2 in the future. Before we wrap up, 2 quick fire questions. What is the best investment advice you've ever received, and what is your favorite book?
I would say on that, there's advice always around diversifying your investments. And there's a school of thought that diversification is a good thing. I think depending on what you're wanting to do with your life, diversification for me is a bad thing, until you create that wealth. So I think, right now, I'm not diversified. I'm going heavily into trying to build something special. And I think if I was to take the diversification route, yes, I might have protection of the wealth that I've got, but I wouldn't be 100xing the wealth that I've got in the next 5 to 7 years. So I think diversification is okay once you've got wealth, not to create it. And I think that would be something to think about. I think book-wise, I read and listen. I listen now to a lot of books. Some of the classics. I love things around mindset and habits, rituals. I think even things like the 7 Habits by Stephen Covey, I think is still a good book around how to sort of allocate your time, and how I think that's really important, is creating a mindset and creating a positive set of routines, whether it be morning or whatever, because it's very easy in this world as well to kind of, once you're not in a corporate job, running meetings all the time, you can waste a lot of time on not the right things. And I think therefore having that discipline and being focused on where you spend your time and how making sure that you're spending time on the important things and having a mechanism in order to do that. So I create, let's say, a 12-month goal, and within that, then what's my goals for the quarter? And then each day I wrote out, okay, if that's my quarter, this week I need to get done, and therefore today I'm going to do X, Y, and Z. So everything is kind of linked. If there's not some kind of system there, I think you could end up being a busy fool. So I think any books that really help you around that journey, I think are good.
Okay, you have a strong message, and thanks a lot for being so open with all the details and not really holding back, because I think you're doing a huge favor for people listening. And again, thanks a lot for doing this, Sam.
No, pleasure. If I can help anyone, then it's a job well done. So, and if anyone wants to reach out, then more than happy to speak.